is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are hearing me. We had a few technical issues this morning on the TFNN network. I think they're getting resolved. And if you guys aren't hearing me, let me know. Are you guys seeing my DIN posting? Just give me a heads up on that just to make sure we've got a chart here. A yes or a no would be awesome. Did you guys hear this guy Charlie Munger on CNBC this morning talking to Warren Buffett? I guess they're still talking. He sounds exactly like Warren Buffett. It's like his brother. Is anyone hearing me? Testing, testing. You guys hearing the audio? Testing? Okay, no audio. Okay. Okay, well, okay. Just doing a tech check here, guys. Can you guys hear me at all? Okay, yeah. Okay. Just trying to figure out if people were hearing me here. Rare moment this morning, little tech issue at TFNN. If you guys are not hearing me in the den, I apologize. I'm going to keep moving forward. Okay. I think we're getting it on Tiger TV, but maybe not in the den. All right. So the first thing we're going to look at, I've got November beans up right now. And again, you know, the dollar's getting hit a little bit, breaking through some technical damage again. You know, commodities have a chance to kind of default rise based on that alone. But, you know, when you look at the action on the November beans, we've got the July contract in our scanner. You know, as we talked about that action, having to, you know, at some point being able to pull back and shorts being able to have a chance and think about getting out. You've had that get away from the inflection point type of move. And as we look at the 240s, you know, we talked about this $10 area being new support for it. Got a little bit of a piercing of that last week. I think that was Thursday, maybe Wednesday, Thursday. And, you know, again, you've got to keep turning around the same way. That's support on this particular vehicle. Let's go right into the dollar. And let's look at the June contract on the dollar. And this is ugly. 94.12, 93.91. Those two numbers were pierced, closed below. Didn't even get a retest really of that. So this is an all-out assault on the downside at this stage. And where's the, you know, this is, again, looking at the scanner and looking at the cell structure across the board. It's okay to be short, not okay to be long. And there's no indication whatsoever, even on a 240-minute view, that we've got any new profiles attempting to appear, any new inflection points to be able to play defense against. And as we look at this, I'm going to pull up the scanner really quick. We're going to go to break. We're going to hopefully have our tech things figured out by the time we get back, guys. And we'll see you back in about 3 minutes.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And if you're in the den, if you switch over to the website, the TFNN website, you'll be able to hear the audio. We're working through this right now. And looking at the futures part of the scanner, I've got this up right now. We're going to go down to the dollar. There's a dollar towards the bottom. As you can see, red across the board, the sell structure is red on every time frame. You've got zero reasons to be long this, and have had zero reasons to be long this since we broke below this general area 94, 12, 13, rounded off 93, 91. That was kind of the long-term throw-up move again. And that's where you have to sit on the sidelines if you're even thinking about being long, but you've also got short opportunities. We've been talking about that. Crude oil still looking quite well. Not a lot of reasons to look at this as something that's going to slow down. And there's a WTI crude oil. Okay. And we're going to go to the chart really quick, go back to crude. As we look at this, pull up the June contract, and John from Philadelphia, I hope I'm on the right contract. He always corrects me. Here we go. 44.49. That support area that we talked about. Kind of okay to be long, not okay to be short at this stage, except unless, and there's that, pull back to that neighborhood, that 4206 neighborhood that closed above on the weekly. The first time we broke long-term trend in forever, it seems like, above profiles, and then you got to look at that inflection point, top of the envelope, as something to lean against, play defense on the long side. Here's the 240s. It's a scary trade to try to short this if you're thinking about maybe trading a pullback into those unfair highs on the daily 44.49. I think that's the low probability trade. You really still want to try to buy support and buy breakouts on this until you're told differently, or until we have some new information in the scanner, i.e. the kind of peel back situation that's happening on heat and oil. And let's just pick out a color. That's the only one. Let's see. Man, not a lot of new profiles attempting to appear. And you know why? Because of the dollar. The dollar's kind of causing a lot of commodities to lift by default. And it's definitely not something that's going to bode well for folks who are short commodities. Taking a look at Apple, let's just get a couple of bellwethers out of the way here. We usually don't go into stocks immediately, but I've got a couple that we must review. This is something, again, rolling the dice before the earnings or before the announcements, and the iPhone, first time in 13 years, maybe lower sales for the quarter. 100, we were hoping to get a retracement back up into that. Didn't happen, to be able to short more of it. And here's the daily situation. Again, no new profiles attempting to appear here. You saw that in the scanner. We're going into Apple. I'm covering this because it's seemingly in everybody's portfolio. And there's that 44 arrow down, even though we're within the balanced area on the 240s. So what does that mean? That means on a short term, if you look at this and you look at the action and you look at how the 240s kind of regulate the trade down, there's that 104 area that we talked about. We had to, just, if you're going to be in the Apple stock before that announcement the other day, you're completely rolling the dice. This is a great example of why you don't want to do that. You don't know which way these things are going to go. You want to trade the reaction, not the action. So this is the reaction, and here's the major inflection points to pay attention to on the 240. These are in the scanner, 95.31, 93.07. So what's the best play here still? Because you don't have any hints on the long term of this thing turning around. And that cup, it's still bang it from the short side on the resistance and the breakdown area. Here's the S&P, a little bit of a mixed bag, ending on Friday. Brett's changed over to negative here on the daily. Finally, you've had those indications before here on the 240s back from the 28th. And as we look at this and we go into the NASDAQ, let's go back to the indices profile heat grid, and we're going to reference Apple again. Here's the NASDAQ. That's the weekly. Here's the daily. This little puppy was red across the board. And let's pull up the NASDAQ here. There it is. Wow. Third from the bottom across the global indices. Okay, so we've got some things to talk about here. Got a yellow peel back happening on the weekly. The weekly breadth is almost rolled over. And as we look at the cell structure of the NASDAQ in general, arrows down on the balanced areas and still red across the board on the long term. Let's just drill into the NASDAQ, and then let's talk about Apple again. Let's first hit the S&Ps before we get the NASDAQ going. We talked about 2059, 2060 having to be defended. With that breadth situation the way it is, very mixed bag, but the long term, you still got to be willing to use that to some degree as defense. We talked about 2059, 2060, this 2046, middle of the profile, POC. We reached a low of, last week, 2046. So again, you try to pick battles around these major inflection points. 5960 didn't hold to try to pick a battle. Then you got this 46, big kind of top of the mountain POC in the wide profile. That's the next time you got a chance to really pick a battle. and then there's nothing below there. So what do you do now? You know, we closed right at this bottom of the profile, a little bit of a move below there on Friday, but closed relatively well. I think the Dow is only down 40, 50 points on Friday's close. But as we look at this today, we're going to talk about this. We're going to talk about Apple. We're going to talk about the NASDAQ when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we're working through some tech issues at TFNN this morning. If you're in the den, thanks for going to the site to get the video and audio. And we apologize. We were taking a look at the S&Ps. We were talking about 2060 being a big time inflection point in 2046. And you might be saying, well, which one is it? Thanks, John, for giving yourself a couple of outs here. You know, it's just the way things work. I mean, there's a let the market come to you set of inflection points. Sometimes they don't hold. This is one of those cases you have to just kind of pick it up again. And we're picking it up again from the long side based on these long-term inflection points because that weekly breath stayed relatively positive. And that, remember, that thing has not really shown. And I'm going to go back to the S&P situation here. There haven't been a lot of cracks in this armor. I mean, we've just come off some pretty lofty highs when it comes to breadth. I mean, anomaly, I would call it here. This is pretty wide, and the calculation was pretty high. So when we're coming off here, and we're looking at some of these major inflection points on the weekly, we've just kind of say, hey, it might be time to pick a battle at this stage on this major inflection point. So here's the daily rolling over. Got a little bit of a mixed bag. Don't have a lot of the internals really saying, hey, I want to be long, want to be short. So you could have some noise around this inflection point. But I'm going to take a look at the notes here really quick before we start talking about a major stance on this. The 10-year, and there's that yellow peel back happening there on the daily a couple of days ago. Here's the 10-year finding support around 129.02. We pretty much hit it to the tick. 129.02 was the low last week. And, we're back above the top of the mountain, the POC on the weekly. So, the notes have been to buy the support play regardless of what the market's been doing lately. And, what's the easier trade? We've talked about the easier trade might be just to kind of focus on the 10-year and buying support on the 10-year because of this global rate situation that's going on. But as we look at this, now you've got intermediate support around 129.31. Let's just call it 130. And how does that pan out when it comes to relativity towards the trading the S&Ps? I mean, right now there's an inflection point to pay attention to, but there's not a lot of direction. You've got a mixed bag on the breadth, and the 10-year looks like it kind of wants to be on the launching pad here. So, does that bode well for the market hanging in there right now? I just don't think you have a lot of edge, and I think you've got more edge by not trading the S&Ps and drilling down possibly into some sectors that are possibly showing themselves. When we look at the scanner and we pull up this yellow peel back in the balanced area is starting to turn yellow here. What does that mean? That's not showing up on our weekly chart here. That means that it's Monday morning. We haven't had all the stocks open. It's the first time we've gotten that indication right there, and we may have a new profile attempting to appear, but I wouldn't put a lot of weight in that right now. Whoever asked that question, let's see, who was it? I can't. Let's see who asked that question. Russ. Okay, sorry, Russ. Yeah, I wouldn't put a lot of weight in that right now. We're within the balanced area right now in the long term, even though that is indicative of a new profile attempting to form. It's hard to decipher what that means other than we may have a new inside profile attempting to form, which will be kind of like an inside bar if you're familiar with some type of charting analysis, which usually means a contraction in volatility. So, but it's Monday morning. Just kind of ignore that right now. It's again, there's a lot that can happen this week before a new balanced area may get emitted, if it even does. So let's go into the ETFs really quick, and let's just kind of surf around here. The technology sector, obviously, as far as breadth goes, on our daily ranking system has just gotten hit a little bit. I'm not trying to be a Monday morning quarterback and just tell you what has happened. We want to try to figure out what to do moving forward. I've talked about the utilities. I'm still a huge fan of looking at these things and buying support. I know we got hit the other week, and I'm going to pull up the utility sector. And when the 10-year caved in, you guys know that, that was kind of Custer's last stance for that thing. And the utilities really were sitting on that same type scenario right there a couple of weeks ago, 48.47, and we've talked about trying to be able to catch a bid on this before we didn't get down to where I wanted it to go, 46.04, where we could back the truck up, Tucker. But man, that's a shame. A shame. So with the 10-year rising, the thirst for yield situation, some of these stocks, I think, in my opinion, you've got now support around 48, but you can also look into some of these instruments within the XLU. I'm pulling it up right now. Some of these things, GAS, we've been talking about this pretty religiously over the past couple of weeks. And let me wait till this chart pops up. Let me restart it here. There we go. This is one where we've been talking about buying support, buying breakouts. And here's the weekly on GAS. What a nice chart. If it ain't broke, don't fix it. Turn the rinse the same way when you go to work. That's really the theme of that. We've also we looked at PEG a while back. Now this one's had a little bit more of a disturbance, but really nothing bad to write home about. I mean, here's the weekly, has basically acted better in my opinion than the XLU in general. These are, again, might be very boring plays on a relative scale for what you guys have been looking at. TECO Energy, we've been, again, preaching this one. Here's the weekly, here's the daily on TECO. We probably need to go to our e-signal charts for this. Let me do that. And as we look at TECO, here's, the reason my goodness. Yeah, there's the weekly. So last breakout on the weekly, 27.54. 0 reasons to short this thing. And now you've got support again, I think, on 27.75 on TECO Energy. Again, might be a boring play for you, but boring is good sometimes. Let's take a look at Amazon. Okay, so first, before we hit Amazon, I want to hit Facebook because just want to show you where this thing's at before we start talking about Amazon. 2 tech stocks that obviously, of the FANG group, that have obviously done quite well. 113.64 coupled with 113.55 now. New profile appearing below. Remember, when you have this happen, that's a relatively bullish scenario. And this particular stock, again, playing defense below that 113.5, 114.5 area, I think is a really good idea on Facebook. We're going to talk about Amazon when we come back, guys. This alone could drag up the NASDAQ.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I think we've got Scott from Safety Harbor on. Scott, are you there? Scott, are you there?
Yes.
How are you?
Good. I'd like you to take a look at Alcoa, please. It seems to be getting a lot of institutional buying and just kind of a buzz around the whole thing, but I've seen that happen before. Then they drag everybody up there, then boom, they all leave. So.
Yeah, no, I hear you. Did you call before about this? Maybe, God, a year ago?
I've been dealing with Alcoa for about a year, yeah.
Okay. Well, thanks for calling, first thing. We're looking at the scanner right now. We're looking at the cell structure on Alcoa. If you remember before, we just had red across the board and really not ever having a lot of things that would mitigate that along the way. So I'm looking at a real strong situation, obviously. After the fact, I'm saying that. But, you know, looking at the dollar situation, if you believe the dollar has really broken technically and is really supposed to be sold in rallies, and the commodity boom is kind of started and the crude oil is kind of broken technically and gold's busting out. And, I mean, Alcoa really, if you look at the profiles, the good news is this. You got some real good defense now to play around 1025, 1026, and possibly even higher. Because if we get a little bit of a pullback on this right now, I think we're going to have a new profile appear, which will be higher than this profile on the daily. So you'll have kind of, so you'll kind of have a new regulation of the trade up. I mean, here's the weekly, 1022, 1025 is that kind of latest breakout. And again, you know, down here. If you'll notice, and I didn't talk about this when I was doing the show back at this time, but, you know, we have new lows in Alcoa. We had higher lows in Navigator, and that was kind of like that Australian dollar trade to start nibbling above 69, was it, or something like that, where we kind of had the same type scenario set up, and then we got above the bottom of the balanced area of the unfair low, and then we kind of used the top as the target. And now we've really, really broken stride here, technically speaking. And the daily, again, has, you know, kind of been nice to work with as far as kind of trading this up. Again, you know, I think this thing's technically broken on the north side, and I think it's to be bought as far as support goes. And you just got to put your stops in. I think you might have a better entry here with a new profile appearing. We'll reference this again on the show kind of periodically. I'm sorry I haven't gone back to it lately. It just was, you know, it was the dog of the...
what excites me is I use a lot of parameters, you know, the charts, the institutional buying, the news, and, you know, recent contracts, all these type of things, and believe it or not, fundamentals, you know, we forgot about that. But it's got all those things going for it, along with the fact that a lot of people are feeling, not a lot of people, but there's quite a number of, at least day traders I know, that are getting a little shaky because things have been going up, and they feel this is kind of a safer haven than you know, Buffalo Wild Wings or something like that. So
yeah, I was gonna say you got to factor that in. That's something I was kind of thinking about a while ago when we were first starting to talk about this. It's hard commodity driven, And
I wish one day you or Tom or someone could explain to us, because people ask me, I mean, at least once a month, why is Chipotle $500 stock and Alcoa is 10? I mean, why are people so excited about these things, and where people's taste can change literally in a day?
Yeah, no. What's the dividend on this stock? Are these guys still paying a dividend, or do you know?
Yes, but I don't pay any attention because I'm out in and out, every day. So
right. Well, the Chipotles of the world. I mean, it's definitely
and even Priceline at $1,000. I mean, think about it. Gilead, who's curing HIV and hepatitis cures, is $80 and in trouble, and Priceline's $1,000.
Yeah, it doesn't make sense. I mean, it's when you start trying to make sense of it, sometimes you get in trouble too. You know that.
I mean, and the stock drops off the table because William Shatner, walks away. And I mean, it's just you try to explain these things to people who are just getting into the market, and you can't.
Well, Scott, when I think when this thing was trading around 15, I was kind of astonished, actually, when it broke down below that 15 area.
You're talking about Alcoa?
Yeah, about Alcoa.
Oh, that was a long time ago, yeah. I got in, I started getting in at in the high sixes. And my theory was at that time, I mean, you can say commodities aren't popular. Mm-hmm. That's like saying the prettiest girl in school is not popular this week, because darn well she will be sooner or later.
Exactly.
So, I mean, silver, aluminum, steel,
I was kind of shocked at the breakdown at 15, and I just kind of put it off my radar screen after a while, because I was just like, wow, my God, what is it? Are they going out of business?
I mean, look at X was down. I bought it in the 7s and 8s, and then the same thing. I'm thinking, okay, U.S. Steel.
Right, right.
Every bridge needs to be rebuilt, in America, they say. Another thing is, I think if by some chance Trump did get elected, I mean, that wall's made out of steel, aluminum, and a huge amount of concrete. And CX, for instance, is right on the border.
Right.
I don't know.
Well, I think there's definitely been
a
sea change in commodities, and I don't think the dollar's going to rally anytime soon. So I think this is a relatively safe, all things considered, play. I mean, but again, I think you got to play defense below 10.20, 10.25 in there on this. I think you'll have a new profile appear here on the daily pretty soon. The scanner will tell you that. It'll give you those inflection points. And if you want to wait for that, that's probably going to happen.
When people don't play with options and they don't play with margin, and I lost $100,000, back in 2009 playing with margin. I don't do that anymore. I try to pick things that, in the worst case scenario, are they going out of business? If you guy asked me yesterday, what do you think about buying 5,000 Alcoa? I never buy. I said, well, buy it. I mean, the chances of it never going up past this point are very little. The chances of it going out of business are zero.
Right.
So it's just, but again, Buffalo Wild Wings, I keep picking on that because Kramer's always talking about it. Remember when he was talking about Crocs shoes all the time? I'm thinking, oh my God, there's people put $80 into these ugly rubber shoes people are wearing. I mean, please, and it's dangerous.
Well, I'm going to go ahead and publicly say that's a lot of the stuff that comes out of that guy's mouth is complete crap. He's gotten so many people into so many things before earnings and then just left them. You know what I mean? Just walks away.
Never talks about him again. I remember he did that one time about 8 years ago, and I don't even remember what it was, but I was stuck for like a month, and I'm like, wait a minute. He said, then I got it. Like you said, it's just.
No, he's.
But again, back to what we said previously, for new people, or even. Stay with the commodities. Steel, aluminum, gold's another story. But the other things they're going to be needed in real soon and in a large amount.
Right. Scott, thanks for calling today.
Yeah, thank you. Bye-bye.
All right, man. Bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and just want to say that Larry is not going to be doing his show, I think, all week, and Basil's going to be doing his show next. So if you've never been involved with Basil's show when he normally does it, you're in for a real treat. Stay tuned. Excellent information and invaluable if you're trading these markets. Let's take a look at gold. 1297 sitting here right now. We reached a high this morning of 1306, so we pierced the psychological 1300 number. There's nothing to play defense against right now. As we look at the scanner, we're going to go into the futures section. We're just going to keep our eye on gold, and we're going to see, you know, green across the board in long terms, and right there at the top of a profile on the 240 minute. We want to look at that. So again, you know, if you're looking to buy gold and you have nothing to really play defense against on the long term right now, and it's kind of okay to be long, not okay to be short. You've got support here at 1286. All right, that's the 240 unfair lows. Remember, this is kind of the regulator of that trade up on the weekly and daily. If you don't have anything to lean on over there, you've got support at 1286. If you're thinking about buying this, I think you got to just sit tight, allow that thing to kind of breathe a little bit. And we're looking at 1286 as support. Looking at silver, kind of a similar situation, just a runaway freight train. The support on this, which we've actually already hit on Friday, 1769.70. You got big support at 1728 right now. But again, that's kind of immediate support on silver. And again, we're up in the stratosphere here. It's okay to be long, not okay to be short on that particular product. We're going to go back to something we were going to mention before, Amazon. We looked at Facebook, talked about 113.5, 114.5. Support on Amazon right now is going to be 651, 652. This is just a big wide profile. We had a weekly close above, big event when that happened. And again, we could have have a little bit of a pullback, but 651, 652 is going to be support on it. It is what it is. Their business model is break even forever, run everybody else out of business. That's cruel. Let's take a look at crude oil. Again, just to recap on this, you got big time support 44.50 on crude. This is in the scanner. I still like some of the XLU plays. I like the 10-year kind of drifting up. The financials, the XLF. Not a big fan of this still, but again, you've got support around 23.27 on this particular product. But again, I think you should probably stay away from the financials right now. Going into the XLE, the ETF itself, you've got support around 67.29. If you go into the XLE in the scanner, you can find some really cool opportunities here. I'm going into the XLE right there, second from the top on our intermediate, drilling down into it, relatively green across the board. A couple of stocks that we had been monitoring, HP. We're going to look at this one. Again, you know, buying the strong of the strong, breaking out again on the weekly and the daily. Not a lot to play defense on going long now. You're going to have to wait for a pullback, but that's been something on our radar screen. Obviously, this little SWN, we got a profile appearing below a price action, 11.46, top of the box there. That's very bullish. It happened on Friday. This is the 4-hour. If we can get this to come up. Short-term support around 14 on this stock now. Guys, you've been great. Stay tuned for Basil. You'll enjoy it. We'll pick it up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.